Hey, welcome to the YouTube page. My name is Steve Melkovich. I'm the co-founder of the Three Rivers Real Estate team at Coldwell Banker Realty. So this page is all about talking about the Twin Cities area. A lot of times we're going to talk about real estate. Sometimes we're just going to go out and explore and stuff like that. Today we're going to take a look and see where the real estate market's at. So nationally, a lot of scary headlines out there, but when we break it down and take a look at what's happening in the market here in Minnesota, things aren't as bad as they might sound. So we're going to do an in-depth analysis about where inventory's at, where prices are at, where new listings are at, what that means, and why that means what it means. So if you're interested, if you like this kind of content, please subscribe, like the page, feel free to comment with any questions you have, and we'll get back to you as quickly as we can. But let's take a look at the numbers.
All right, so one of the first places I like to look when I'm taking a look at where the market is where we're at for months of inventory. So when we look at September, we're at 1.8 months of inventory, which is exactly where we were in August. So we've kind of leveled off, at least in the short term. So if you're not familiar with months of inventory, what that means is if no one was selling houses, builders stopped building, no more inventory, no more houses came on the market. Given our current demand, we'd be out of houses in about 1.8 months. So why this is important is it kind of shows, where the powers of scales are. Who has the power? Do sellers have the power? Do buyers have the power? A balanced market is right around 6 months of inventory. Anything over that, it's a buyer's market. Typically under that, 4 or less, considered a seller's market. So we're still well into a seller's market. To provide this a little bit more context, we want to look back, pre-pandemic levels back in 2019, September of 2019, we were at 2.7 months of supply. So we're still well below where we were even pre-pandemic levels. So things haven't really shifted all that much quite yet from an inventory standpoint, despite them shifting a lot from a pricing standpoint. So pricing has gone up. So another place that's where people like to go kind of next is, hey, what are prices doing? Are they starting to come down yet? And they are a little bit. We saw it come down just a hair from August to September, about 5-6 grand there, from 375 to about 370 from an average or a median sales price in the metro. Now, a lot of people might say, hey, that's a good sign. Buyers are starting to get a little more power, but we're in Minnesota. It's very seasonal here, and this is what we've seen basically everywhere year for the last 10 years as things start to cool off in Q4 through Q1 until we start to see spring months where prices start to come back up again. So again, business as usual from a Minnesota standpoint. We do want to keep pace or keep an eye on, the degree of changing here. If this really starts to fall off in October, November, December from a pricing standpoint, then we might start to see inventory really start to creep up, start shifting more towards a balanced market. But only time will tell on that. A lot of things are kind of playing in here. One of the main things of why we're really not seeing inventory start to come up a whole lot has a lot to do with interest rates. And one of the main causes of this is we're seeing new listings really start to decrease. Again, we see this pretty much every year, but when we compare year over year, this September 2022, we had just over 19,000 homes hit the market. Last September, we're just over 23,000. So we have a decrease in about 17.5%, 17.6% of new listings hit the market. So supply and demand, we need supply to come up as demand is coming down for things to start to shift. Now we're seeing demand come down due to interest rates, but we're also seeing supply come down too because people aren't selling. So if we really start to unpack this and what interest rates are doing, let's take an idea of where interest rates are at today. So interest rates right now, according to Bankrate, 6.89%. So if we kind of really start to look at this with just a generic mortgage calculator, let's say you're a first-time home buyer. Let's say you bought your first home 2-3 years ago and you got an awesome interest rate of 3, which wasn't too unheard of even earlier this year in January, and we were around there, for the last 2 years or so. So you got your first-time home there. You have a loan amount of $240. Your monthly payment's just over $1,000. Now, let's say you're ready to trade up. You're ready to sell your house, buy something a little bit bigger. Maybe you've kind of outgrown your house. You've had some kids. You've got some more pets. Maybe you want a pet. You want a yard or something like that. You want to increase your house, get into something a little bit bigger. So let's just generically say we're going to go a little bit bigger, double the size of the house, double the size of the loan, roughly. But our interest rate is 2.689. Brings our monthly payment $2,895. So you've almost tripled it. You've kind of 2.8 times it just by trying to trade up your house. That's a hard pill to swallow for a lot of people, especially in an area where we're talking about being in a recessionary period. A lot of people are a little worried about where their jobs are, if they're going to get laid off coming up. Inflation's coming up, so cost of food and utilities and all that are coming up with it. Now you want to trade up, but monthly payments is just really not making a whole lot of sense. So you have a lot of people that are kind of sitting in place right now because economically it doesn't make a whole lot of sense for them to sell, which is why we're seeing some of the new listings start to come down. People are hanging tight on the bottom end of the spectrum, the first-time home buyers. The problem is we're also going to see that on the upper end of the spectrum. Let's say you are someone who traded up 2 to 3 years ago and you have an interest rate of 3. Monthly payment of $1,855, but now you want to trade down, get into single level living. You don't want to deal with lawns. You want to get an HOA or something like that to deal with you. Well, the same is going to be kind of true on the back end of this too as we go the other way. Oops, 6.89%. You're really only saving about $300 a month trading down, getting a lot less house, things like that. And if you're trading down, you're getting a house with an HOA or something, the HOA might change that monthly payment to be the same. So a lot of people, if you're trading down, you're doing it to free up some money or some equity in your house, but you also want to live cheaper. You don't want to be paying as much. So it doesn't make a whole lot of sense to trade down when your monthly payment is going to stay roughly the same. It's not making a whole lot of sense for people to trade up because it's costing too much. And of course, we're seeing inventory crunches on both ends of those spectrums. People are holding tight on both sides of the spectrum, which is going to, again, put a lot of pressure on where the new listings go. Supply and demand. If we don't really see an increase in supply, when demand's coming down, this monthly supply, it's might hold steady for a while. Might not see some drastic increases like we saw, back during the recession where a lot of people were trying to sell and nobody was buying. We saw inventory really, really get high. So we start seeing, back in 07, 08, when we peaked out on almost 11 months of inventory. We're nowhere near something like that in the current market. So, there's a lot of scary headlines out there right now, but we're nowhere near those levels currently. And unless we really start to see a really big increase in supply, probably won't get there. And a lot of this is going to be dependent on where those interest rates are. If we end up sliding into a recession, historically, that has driven interest rates back down. So it's going to bring a lot more buyers into the market, maybe free up some inventory for some things to get moving there. But only time will tell for that. We're just in the beginning of October here. We'll see how October, November, December play out in the market in general. But overall, it's kind of business as usual in the Twin Cities. It's getting cold. People aren't moving as much, but it's nothing out of the ordinary that we haven't seen before. So if you have more questions about where the market's at, specifically your region or something like that, feel free to reach out in the comments. Otherwise, catch you next month.